Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, welcome back to another live stream. Hope you're doing well. We believe we're live. I don't see anyone in the stream just yet. Let me just double check that. Is anybody here? Hold on. Yeah, it looks like nobody is here. Hold on. Are we live on YouTube? It might be private on YouTube. Checking. No, we are. Okay, hold on. Oh, we're live. And there's people here. Okay. I can't see the chat, so I'm going to pull it up on YouTube. Hold on. I think we are live. Okay, yes, you guys are chatting here, but in our software, I'll show you what I cannot see right now. Usually, when you guys are in here chatting, I can see it right here, but I can't see anybody. But then when I pulled it up here, I can see you on YouTube. So I can see the chat here. So you guys are there. I'll trust that you're there. I think StreamYard is having some software issues this morning, but we are live. Hope everybody is doing well. Sorry, let me just sort out this technical difficulty really quick. Okay. So we're live. Sorry about that, guys. A little bit of a technical difficulty here this morning, but it looks like we are good to go. Markets are a little bit lower here this morning following yesterday's announcements. A little bit of a confusing one, right? Because a lot of people were like, I had some interesting comments yesterday on the YouTube video, saying my video didn't age well because, the markets turned around because I, came out on my video and said, hey, we had a great CPI print and an announcement of tariff deals. We look good. And obviously, the market reversed, but you have to take this in context, right? So I had some people yesterday commenting and saying, oh, this aged poorly. I mean, did it? I mean, this market is ripping higher. Yes, we are down slightly here, but look how small of a reversal that actually is. For now, I mean, this could turn into a bigger reversal. But I think what happened, and this is the best explanation I can give to you as to why the market may have turned down, but really it didn't turn down. We haven't moved that much from the highs, right? You have to put this into context. Did we actually really sell down that much? We're down 1.3% from the recent highs. No, not really. But what I think might have just been the consensus yesterday is the market was looking for that good news and the trade deals to solidify and all this and that. And we pretty much got what we were expecting. We got a deal between Trump and China. However, I think the markets kind of had a sobering up experience yesterday. The concept of like 90-day pauses is almost just like, let's have another round of drinks before we deal with it in the morning, right? That to me is like the 90-day pause vibe. And so yesterday we had a little bit of like, okay, we got to take our medicine now. We are still doing tariffs. We're still doing the things that caused the market to freak out. It just may be lesser so than expected. So, I think it was a little bit of a buy the rumor effect that we saw in all of this craziness here recently. And then maybe just a little bit of profit taking on the initial kind of announcement. Now, another thing is that we had certain stocks move lower here yesterday. Specifically, I talked about this on my other channel, my stocks channel, talked a little bit about airlines, which went down. Just a little bit of a side note. This is very in the weeds with it, but in the CPI report yesterday, a big decline in the CPI was actually specifically on the airline airfare, right? So airfare prices went down. And so I think what might have happened on the airline stuff specifically is that you had some selling due to what is perceived as potentially low demand for airline travel. So just wanted to share that. I do have a stock channel. Yes. Trader Nick Stocks. If you're interested in stocks, go check it out. If you're not interested in stocks, don't go check it out, because I don't want you to don't like I would prefer the way, I've talked about this in the past. On YouTube, it works is like if you go subscribe to a channel, but you never watch it, or when you do watch it, you watch like 10 seconds of it, it actually hurts that channel's performance, because YouTube says, oh, people don't like your videos. But if you actually are interested in stocks, search it up on YouTube. But please only do that if you are actually a stock person. Trader Nick Stocks. Like, I don't want you to subscribe unless you actually like stocks. I know it's weird because you're like, don't YouTubers just want subscribers all the time? I genuinely only want people to go check out that YouTube channel if you really like stocks, not indices. I'm talking about Apple shares, talking about Google shares, Nvidia shares. If you like that stuff, check out Trader Nick Stocks. If you don't, please don't. I know it's a weird question, or it's a weird request. Don't go subscribe. Don't go support the YouTube channel, because I appreciate the support, but I only want you to go watch that channel if you actually care about stocks. If you're more of a Forex person, more of a gold person, more of an index person, you're in the right spot. Okay, so we've got some questions in the audience. Got locked out of the Edge Finder. Hey, please follow the instructions on your Edge Finder to get access to the new link. We've had many people moving over to the new link, and we've put specific instructions on the Edge Finder to help you to get to the new one. If you're not getting a reply, it might have just been because we were out of the office. We just got into the office, so feel free to send us a direct message and let us know using the link that's on that on those instructions. Okay, so we have, in just a few minutes, guys, here, we have the second inflation print of the week that really matters, which is, of course, the producer price index. Let's talk a little bit about that and how that could potentially move markets today. Yesterday, we had a soft print on the producer price index. I'm sorry, on the consumer price index. Now we get today the producer price index, which is the other side of things. We get the wholesale prices, essentially. We get that in 4 minutes. Could this move markets? It definitely could. Because if the producer price index is higher than expected today, we would call that a hot print. If you get a hot print on the producer price index, that in some ways would offset CPI. So let's say you had, for CPI, you had a cool print, right? But if PPI comes in with a hot print, which can happen, these two things don't always have to move exactly together. There are different inputs to these two variables. So if you get a cool print on CPI, but you get a hot print on PPI, that could actually cause the dollar to move higher, and stocks could not like that and sell off. I think the reason yesterday you had some interesting moves on the dollar. Dollar's lower, by the way. Oh my goodness, I did not see this. All right, chart of the day, dollar index. Dollar index just broke through these lows. As a culmination of what's been going on with weaker than expected economic data. And I think what this is telling us, guys, is the market is telling us its reaction to the announcement of the deal that we saw between, or the supposed deal that we saw between the US and China. The outcome of the negotiations, 55% tariffs on Chinese goods. Some may be saying, the market seems to be telling us that it thinks that that actually could hurt the US economy. That to me is what this is saying. I can tell you that I can support my claim here. I'm not telling you if I think, that's going to crush markets or if it's going to be great for markets or whatever. I'm just telling you what the markets are telling us. Price action can tell us a lot about the behavior of the fundamental kind of response to a particular instance. So in reaction to the announcement of the the tariffs, we saw a collection of specifically sensitive to tariff stocks move lower, right? So Apple moved lower in response yesterday. We saw Amazon, another consumer sensitive, Walmart, right? Many stocks yesterday that have, and the big one that I talked about in my video yesterday on the stocks channel, Delta Airlines, right? These sensitive names to recession stuff sold down yesterday. And what I think that might be telling you is that, okay, we're looking at a situation in which the market is a little bit back on edge about, okay, well, if we're going through with this tariff stuff, we're past the 90-day pause with China. If we're going to go into the tariff stuff, the market may have some questions and uncertainty about how that the ramifications longer term on the US economy. And I think right now that response is sell the dollar, get out of there, because we're a little bit unsure of the economic impacts of tariffs, which, by the way, could take some time to materialize in the hard data. However, the soft data, let me show you some soft data that I actually consider to be pretty valuable stuff, is the manufacturing and services PMI data that came in beginning of June was pretty negative. Now, this is a forward-looking soft data. What do I mean by soft data? It means that it's data points that are not, formulating in like jobs reports or the CPI report. These are surveyed responses, right? The services and manufacturing PMIs looking forward are pretty negative. They're both in contraction territory. So with the response to, okay, tariffs are coming down the pipeline, there's very much a possibility that you get, potential a little bit of a cooling off in the U.S. economy. Guys, we've got 40 seconds to go here before the producer price index numbers hit the floor. If somebody could drop, I'm looking at you, Ivan, if you could drop the year over year number when it drops. It's not on Forex Factory. And I love my Forex Factory. So coming in here in about 20 seconds, we're going to get the producer price index. We'll see how this impacts the US dollar, how it impacts indices. Everything on your screen right now will give you a full look at how the market reacts. Dollar down big here. Breaking news coming in. All right, initial reaction here, not too aggressive in either direction. Gold slightly higher, dollar slightly lower. Stocks slightly bouncing back. Looks like we've got a soft month over month. Unemployment claims. Ooh. Thanks, Ivan. Year over year, Ivan, appreciate you. PPI year over year, 2.6%, rising from the previous at 2.4% year over year PPI inflation. So came in as expected for the year over year number. Now, the month over month number was a little bit soft. So yeah, PPI kind of neutral. However, what's not so neutral is, once again, guys, unemployment claims ticking higher here. This is the third straight rising week of unemployment claims rising. So this is worth mentioning because take a look at this. So the forecast number here was 242K, 248K. So let's look at this on a historical. I mean, that's straight up a bearish reaction from the US dollar. Let me show you this on the labor stats side. So if I pull up really quick unemployment claims, take a look at this. So we're talking about unemployment claims hitting up to 248. So we're going to come in right there. That's 3 weeks of 1, 2, 3 weeks in a row of rising unemployment claims and rising more so than expected. So a little bit of softness in the labor statistics here this morning and softness in inflation. So both of those things would suggest some weakness in the US dollar, and we can see that continuing. So we see dollar index now confidently below those lows here. And the dollar bearish, for those, on the dollar bear trend, this continues to be, to me, a trend that can continue, especially with this breakout. To me, if you get a strong close today, any sort of pullback on this, to me, suggests more weakness for the US dollar. I could see things like, if I take a look, for example, at the euro dollar, look at this euro dollar breaking out big time, guys. This is big. So euro dollar taking a move beyond the 1.15 level. Take a look at the pound US dollar. You can see a big push up here this morning. Dollar yen is moving lower. I'm glad I got out of that trade. Australian dollar moving higher, the Kiwi dollar moving higher. Dollar weakness still the theme here today, that is for sure. So if I'm taking a look at the dollar index, like I said, I think the path of least resistance here is lower. You've got gold moving higher. To me, I would not be surprised if we go back to test these all-time highs for gold and perhaps even move beyond it. Again, the dollar softening story is a pretty good one here right now. Give me just 1 second, guys. I need to respond to something. Yeah, gold pushing higher, huh? Okay. So gold sitting at 33.80 or so. Is it a bargain here? It's crazy to think. I've been doing this for a long time, and in the last few years, I've watched, as many of you guys probably have too, right? If you've been trading for a couple of years, you've probably watched gold do its thing where it just keeps going up and up and up. And so many times I get these, I literally was reading a comment yesterday on my channel. Somebody was like, Nick, they're going to fool everybody. Gold is not going to break through the highs and it's going to fail out and the big reversal and big crash is coming. But can I tell you something so real that I've experienced? Because I feel like I'm in a time loop. The person who says it changes, but the thing they say does not. On repeat here, guys, for the last few years, I have had people commenting over and over and over about how gold is going to crash. Gold is going to, turn back. It's going to move lower. It's all over, right? I have had that comment, the same sort of comment from a different person rotating in and rotating out in my channel. Now, the reason I tell you that is because gold is in such a great, strong upward trend, but it's not always like this. But right now it is, right? Right now, the trend, they say, simple expression, the trend is your friend. Trend is moving higher here on gold on the daily chart. Still looks really good. I mean, plot your longer term moving averages and look at what you're looking at. You've got a beautiful overall strong upward trend. We're actually building a scan specifically for this one for stocks right now in the new stock box features that we're working on. Whenever moving averages are lined up like this is just a sign of a winning story. And so I think that there's just a number of reasons why gold looks attractive. Number one, maybe an easy one for everybody, is whether you like or dislike the current administration. Trump is a volatile guy. And, what I mean by that is whenever he does things, he does it, aggressively, does things big. You might like it, you might dislike it. Gold, however, likes it because what it does here in response is gold moves higher on uncertainty, on chaos. And so we had a little bit of softness in labor statistics today. We had inflation data this week that was soft. And so this heat map, right? So when I look at the US dollar and I say, why are you bullish or why are you bearish? Once this heat map kind of updates here, we will probably see. So CPI yesterday was cooler than expected for inflation. Today we also got cool. Actually, we got a neutral reading for PPI. So actually, that's going to take us back to neutral camp. Jobless claims is moving lower here. It's moving higher here, which is a negative for labor statistics. I'm curious why we went back into, or what gain here we had on this. Let me just look at this. Did something go neutral? Unemployment rate, CPI. This was bearish. Oh, we had we had mortgage applications that came in better than expected. Interesting. So anyways, if I take a look here at where we're at with gold, Is there upside for this one? I would say yes, I think there is. Right, the dollar index looking soft here is a sign to me that the path of least resistance right now for non-dollar stuff is higher, right? So if I'm looking at like euro dollar and looking at pound dollar, actually, can I look at the top setups page and see if I have a specific currency? Yeah, so euro dollar, where's pound dollar? I thought pound dollar was on here. We might have lost a little bit of the pound strength due to the, I think there was a GDP number or something that came in a little soft for UK, or something came in a little soft, but also COT data coming in a little bit soft. So let me just do really quick major currency pairs. So euro dollar is getting the strongest reading here, which is interesting. Let's just pull up euro dollar and look at this a little bit closer. 1% up move today. That's huge. By the way, if you want to try out the Edge Finder, we just dropped a link in the chat if you want to try that out for 30 days. There's some information on it. Big breakout here on the euro. I mean, this is a pretty clean break. If we close like how the candle currently looks, to me, that would suggest more upside for euro. Momentum clearly favored here. But yeah, I like that. I like that chart quite a bit. Euro dollar continuing to advance higher here. Huge breakout. We had this big downtrend in euro dollar. Now we've really truly reversed course big time on the euro. Taking a look at indices here for just a second. All the indices still looking really good, especially with this cooling inflation data. I mean, this is a good story for inflation. Now, what's not so hot is the PMIs looking forward look a little bit negative. So yeah, PMI is looking a little soft. That's definitely a little bit of a blemish on the story, but those things can change. The outlook for the economy is a little bit more volatile than like the hard data, right? So when we talk about soft data versus hard data, right? Soft data, here's the thing. Hard data looks, here we go. So hard data looks backwards. These are like jobs data, inflation, etc. Soft data looks ahead. PMIs, consumer confidence, right? By the way, we could put like retail sales over here. So this is hard data versus soft data. So very quickly, I know what everybody's probably thinking. So if soft data looks ahead, why would you ever look at hard data that looks behind? Isn't that a lagging indicator? I know somebody thought about that right away. So if hard data is backward looking, why would you look at it at all? Why not only look at soft data? Well, I'll tell you right now why soft data and hard data should both be considered. However, if I had to pick which data point, let me ask you guys. If you could only look at hard data or soft data, which one do you think would be more valuable to look at? The forward-looking soft data or the backwards-looking hard data? And again, jobs data, CPI reports, that would be your hard data. Soft data, PMIs, consumer confidence, investor surveys. What do you think would be more useful to look at? Imagine you could only look at one. The beautiful thing as fundamentalists is we don't have to look at one. We can look at both. But I'll tell you, my answer on this is that I definitely prefer looking at the hard data, because the soft data is very volatile, emotional, and admittedly, oftentimes very politically biased. Now, what do I mean by that? Well, if you ask people right now, do they think things are going to get better or worse? A lot of people are going to vote with their politics. And that's not a red or blue thing. That is just a human being thing. Because guess what? In Biden's time, a bunch of, right-leaning people would have said things are going to be terrible. And a bunch of, left-leaning people would have said things are going to look great. And then flip it for Trump, right? So there is there is a bit of that. When you ask people, hey, are you feeling better or worse about the economy? People answer inevitably with their biases. It's just human beings, right? So the soft data to me is subject, and this is not something I came up with. This is commonly referred to. Even Jerome Powell talks about this. People just have a tendency, naturally so, to vote on these sort of surveys based on their political leaning, their bias around the world, their perspective of how things are going, etc. That does not necessarily equate, however, to what happens in the hard data. And this is, to me, why I lean more heavily on the hard data, is because people will sometimes say, oh, things look terrible, and then they'll go buy a new car. So this is where the soft data can be very misleading. But again, there's pros and cons to everything in trading. Do you know what is powerful about the soft data? It's forward looking. It's asking people that see information coming in the future. Like, for example, if you asked me about the future projections of A1 trading, I could tell you a lot about that. And that's a forward indicator of how things might go at my personal company. But what if you did that with companies all across America, and you surveyed important people within all those countries, and all those companies, and you said, hey, are you hiring people? How are you feeling about your sales this year? How are things looking on your efficiency? If you ask these questions to those people on a surveyed level, those are some powerful indicators. They're forward looking, but they're not perfect. And this is where you want to look at both. You want to look at both the hard data, the data that's actually materializing, and the soft data, which is trying to look ahead into the future. So this is why when you pull up the Edge Finder, again, we don't mess around here at A1. Everything that's in here is in here for a purpose. It is designed to be specifically inclusive of both soft data and hard data that we find useful and that the Fed finds useful. That is why the Edge Finder is as awesome as it is. Okay. So, and I say that with 100% humility. It's an amazing product. It's the best one you ever saw. But my point is, we want to look at the soft data and the hard data and come up with an idea generally of how it might impact the assets that we trade. That's why fundamentals, that's why we've spent so much time building tools to track these fundamental data points, is because it can help us to get a more clear picture of where things might be going next. Yields are lower here today following this. And again, we had yields down yesterday, yields down again today. Bonds are up this morning. Nice bounce back in bonds. Oil is lower here today. Gold is up today. Look at this, gold up 1%. Nice little push higher. Stocks are mixed to slightly down here from yesterday's price action. And now I want to get into some more charts with our guests for the day. It's Miko and Marco. They'll be joining us here in just a second. Before we do that, let me just quickly remind everybody, we are coming in to the end pretty soon of our VIP sale that we're doing currently. If you'd like to get access to all of the trade signals that I am sending, as well as our top traders in the A1 trading community, you can currently get 45% off of our VIP group by sending a direct message to our team right now during this live stream. So we'll leave a link. We've got it right here. Thank you, James. If you guys would like to take advantage of the 45% off discount, it's happening right now. And it is our biggest discount that we do all year on memberships to our Discord community. You can see all the trades we're taking, why we're taking them, what we're looking at. And most importantly with this, let me just briefly show you this. The most important thing to me with offering a service like this is, I know there's bad reps out there about like, oh, signal services, and you're just, selling a service. Well, first of all, we back everything with verified trading results. You can pull up on our website 5 years worth of historical trading data that I've live logged into a brokerage to confirm. Like it's real stuff. I'm not here telling you, I'm getting rich quick through every single trade I take is amazing. But if you'd like to get access to the trades that I'm taking, and more importantly, the analysis and breakdown behind why I'm taking each trade that I take, you can consider joining our VIP Discord with, again, like I said, that 45% off discount by sending us a direct message on our website. Up next, we've got Miko and Marco joining the call to go over some trade setups that they're looking at here in today's current market. So we're going to take a quick break to thank a sponsor, and then we'll be right back after this. Stay tuned.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, we're back with Miko and Marco to talk technical setups for the week ahead. How are you guys doing? Welcome back to the show.
Hello.
So we typically start this session, and for new stream viewers, this is a weekly session that the three of us do together. We talk about trading setups that we're watching each and every Thursday. And typically how we like to start this is we just go through each of us presenting kind of our chart of the day, and whatever that is, current present trade for you or something that you're actively watching to potentially get into. Marco, you wanna start us off?
Yeah, sorry, you're cutting up a little bit.
Sorry about that.
No worries. Maybe it's on my end, actually. I'm not sure. But anyway, for me, the top setup for today would be the pound and the US dollar. So I did take a buy setup right here on the 4th of June. My reasoning was basically at this point, we had the fundamentals, which were heavily bullish. So the pound was getting some very strong fundamental data. And the dollar, not so much. The dollar has been dropping, and I do expect it to actually continue dropping as well. So I took a little flag entry on the 1 hour chart with a pretty big stop loss of around 110 pips. So currently that's running in a little bit of a profit because we had CPI, which came out bearish for the dollar. Now we had PPI as well, which came out a little bit bearish for the dollar. So this all kind of fits the narrative of buying the pound against the US dollar. Also, we had a little bit of, let's say, negative pound news, but I'm still pretty bearish on the dollar and pretty bullish on the pound. So I'll just keep trailing this position. And that's kind of the top pick for me.
All right. Yeah, no, pound dollar looks great on the technicals, pushing higher here again today. And same with euro. I was curious about that one with you guys too. Maybe we'll talk about that in a second. Miko, what about yourself? What are you watching here?
Yeah, so for me, I quite like excuse me, I quite like silver. We've seen some downside recently. Looks like it's pulling back up now a little bit, but I really like in terms of the price action. It looks very, very clear to me in terms of the breakout a few days ago. So I'm kind of just waiting to see if we can get that pullback. It looks like we might see it. Price kind of losing momentum a little bit. I think the key thing with silver is we haven't gone straight back underneath that levels. It's broken out and it's holding ground so far. USD is looking a bit bearish. That might help the overall kind of direction for silver to the upside as well. So I'm basically waiting for a retest because the way I'm looking at silver is that we've been ranging for the past kind of yearish, and now this could be where we see momentum really pick up and kind of see silver maybe catch up with a bit of a trend like we saw with gold recently. So yeah, really like this opportunity. It looks like we're pulling back. Hopefully we can come a little bit further to 35, but the goal is just to trail stops and see how far we can take this one.
Sure. Yeah, no, silver's been a monster breakout here recently, and I just I wonder too if it will give us that pullback, because I'm also watching for that. I think probably a lot of people are keeping an eye on that 3450 area, 3450 range. So we'll see if we can get a pullback into that. I also wanted to ask you guys, Marco or Miko, while you have the screen, what are your thoughts on the dollar index? We just had a big break lower around that 98.50 level. And I'm curious what your thoughts are, because of course you just talked about metals here as well, obviously pushing higher here recently on some of that weakness. What are your thoughts on the dollar?
Yeah, so dollar is looking pretty weak right now. In my book, it looks like the trend we've had pretty much since Jan is looking like it's continuing. So yeah, I mean, there's not much I can do apart from looking to short the dollar right now. I like the fact that we had a bit of a build up here of sideways price action, because it does provide a bit of a level, which perhaps we could look for a retest or for some more downside. Again, we're at lows. I do think a bigger pullback could be happening soon for the USD. So it's not a situation where I'm looking for a crazy move. The market has been trending for a while, but I think there could be some nice kind of intra-week opportunities if we do pull back and continue to see that momentum. Looking at some other USD pairs as well. Euro looks pretty bullish to me. So again, I think some pullbacks for this one look good, and kind of just the inverse of what the DXY is doing. So yeah, I'm pretty bearish on the dollar. Trend is still alive and well. Some pullbacks look good, and hopefully can take some shorts.
Yeah, I like the euro and pound both look really strong. Are there any other dollar crosses before I kick it over to Marco too? Any other dollar crosses you're watching?
I like pound USD. Marco mentioned that earlier, but I'm looking to see if price can break the high, because again, this one's been ranging as well. So if it can break the resistance there, I think some retest opportunities look good. Some of the other dollar crosses haven't been great. Aussie dollar's been very, very choppy, so I'm not really looking to buy this one. The trend isn't as clear cut. Same with the USD, so I'm giving these guys the skip. I mean, they are still looking pretty bullish, but I'm just not liking the way they're trending. Dollar CHF, not too bad actually. I think that's still got room to fall into. It's not quite at the lows yet, so there's still a bit of room there, so potentially a bit of a pullback. I would be interested in some shorts there, back into the lows. So dollar CHF, euro looks good. Those are probably my, and pound as well. Those are my preferred USD pairs.
I like it. Yeah, dollar Swiss, that chart looks pretty good too. Very, what I like about the dollar Swiss is it tends to look really similar to like the DXY. Like it's very, it tends to move with it. Obviously, most of them move to an extent like it, but dollar Swiss franc, I've just noticed tends to move very closely to the DXY. Same with the euro dollar, of course. Marco, same question to you. Any other dollar crosses? Because you mentioned pound dollar. What are your thoughts on the other ones? Are you pretty bearish on the dollar as well?
Yeah, so I'm kind of betting on the continued dollar weakness through the pound dollar, and I also have a buy setup on Bitcoin right now, which also kind of makes sense to bet against the dollar. Silver, I really like. I have an alert set at this level, even though the fundamentals are not yet fully bullish on the edge finder. I think this is still a good play if we do end up retesting this level, and it makes sense again because of the dollar weakness. So those would be my top 3 picks. It would be the pound dollar, Bitcoin, and still looking for entries on silver. I would like a little bit of a pullback to this level. So yeah.
Sure. Yeah. No, it's been interesting just watching the dollar continue to push lower here. It's pretty much turned everything around from, what we saw in 2024. We saw that big, strong push upwards on the dollar. And now it's been pretty much dollar can't get out of its own way. It keeps moving lower. Of course, we had some trade deal stuff that came out. People now kind of back to nervous about deals solidifying that kind of lock in, okay, tariffs are a thing. They're going to stick around for the long term, 55% between on imported Chinese goods from the United States. I mean, that kind of solidifies a little bit of that worry to an extent that we had about tariffs to begin with. So it is seemingly sticking. So we'll see how all of that plays out. While you have the screen too, you talked silver. What are your thoughts on gold? And if you were to do a cross-examination between silver versus gold, which one do you like better? Like if you were, because I think obviously like you've mentioned dollar bearishness, which one would you prefer, silver versus gold on the list?
Yeah, so for me right now, if I take a look at gold on the daily chart, I think we are a bit flat here, a bit range bound. I'm currently risk on, which means I want to buy the indices, and I don't really want to touch gold for now. I do think silver is a better pick. Silver right now, I mean, we had the massive push on gold. It happened in the last couple of months. It was absolutely huge. But gold, in my opinion, has a lot of catching up to do, or silver has a lot of catching up to do. So I was waiting for this breakout out of this flat range, and I do think we have a lot of power to actually go up. Let's switch to the monthly chart, possibly all the way to, let's say, this high, or maybe even the all-time highs. So I prefers silver a lot more, and currently looking for buy setups. Whereas on gold, being patient, I'm still risk on. If I see any issues with the tariffs or with, let's say, the stock market, I'm going to be looking for buy setups here as well.
Yeah, and that is it's always interesting just to, when you're considering looking at metals, to think about like, are we more in a risk on, risk off environment? I guess I want to ask that same question because you talk about it often within your analysis, Marco. I'm curious too about Miko, when it comes to risk on versus risk off. Do you factor in, like, let's say you're looking at the euro dollar or you're looking at a currency pair, do you factor in at all like the status or whether or not we're in an environment that is more of a risk on? And I'm not necessarily talking about like doing fundamental analysis. I'm talking about even keeping it just technical. Like, is gold ripping? Is the yen strong? You know, these are obviously like clear risk off sort of signals. Does that play into the analysis that you do between like chart selection and entries?
Yeah, absolutely. I mean, if I'm not getting a clear, very bullish or very bearish reading on an asset, for example, on gold, which right now it's getting, I think, a little bit of a bullish reading on the edge finder, but I would not be looking for buy setups because the technicals don't look the best, in my opinion. We're kind of flat here on the daily chart, and it's a risk on environment, which means great for stocks, great for the Nasdaq, great for the S&P, not so good for gold. If we got a very bullish reading on the edge finder, then I would be, let's say, more likely to tolerate a risk on environment and still buy gold, or tolerate a worse daily chart and still look for buy setups on gold. So if I'm not getting a clear fundamental reading, then it's down to the macro environment, technical chart, and then I can make a decision. Do I want to pursue, let's say, buying gold in this case, or maybe stay out?
Sure. Yeah, I guess same question to you, Miko. When it comes to how much, you know, the state of, you know, the dollar or the yen, right? These risk on, risk off movements that we've been seeing, these sways in and out of tolerance for risk. I think, you know, there's so many ways that you could quantify that, right? Like you could say, like I know I mention this to you guys all the time, the that Bitcoin to gold ratio chart that I love to show. Like, this to me is one of my favorite indicators of just like, are we in a risk off versus risk on? Because this is two notoriously opposite kind of things. Bitcoin, which is definitely more risk on, versus gold, which is more risk off. So I like to use something like this just to filter kind of my bias. But I'm curious, Miko, do you do any of that, or do you keep it like super purely technical? You're just looking for charts moving with momentum and pullbacks, or do you take into consideration kind of the state, risk on, risk off of the market?
I do when it's a bit more obvious. So when things are kind of really left or really right, then yes, I would take into consideration. But more of my focus is, especially if I'm going to like buy AUD USD, for example.
Yeah.
I pay a lot of attention to other USD pairs. So if I get set up on Aussie dollar, it's because I'm also expecting similar correlated moves on other USD pairs or other AUD pairs as well. So risk on, risk off in terms of kind of the heightened situations, yes. But in terms of my day-to-day trading, I'm also concentrated on correlated currencies to the pair I'm looking to trade. So all I'm looking for is just kind of synchronicity between moves I'm expecting to happen and the pair I'm trading. So not really day to day, but in terms of the bigger picture, yes.
Yeah, that makes sense. And I think, like, you know, clearly these risk on, risk off, or currency strength studies can be really interesting for Forex traders because, you know, in 2022, 2023, the Japanese yen was getting pummeled. Like, it was just like almost the easiest trade in the world for a little while, just to be short the Japanese yen. It was so, you know, even leaving, I mean, fundamentally, there was a number of reasons why, but even just keeping it technical, it was just like you had this dominant upward trend. And for me personally, I do tend to gravitate to like what I consider the easy trade, which is like when something is just really ripping or really falling and just consistently doing so. I find it really hard to try and like call the end of that, and much rather just kind of look to join it. So that's why I asked that question, is because when there's like a really obvious risk on trend or risk off trend, I've found in my career of doing this, like it typically is easier to just follow along with it rather than try to call the reversal on that. So picking specific assets based on that can be useful. Miko, I also want to ask you, just from your technical perspective, what are your thoughts on the indices? Because I think Marco mentioned being pretty risk on oriented. I too am, I'm long some indices, looking at some stocks and things like that. I'm just curious what your thoughts are on any of the indices right now.
Yeah, so I mean, the indices look relatively healthy. I mean, they're overall very, very bullish. Looks like Nas is about to come back into the all-time highs. S&P, I don't think we're too far away either as well. Yep, almost there too. So the overall narrative is still very bullish. However, we are looking a little bit tired, more so in the lower time frames, which isn't necessarily a big red flag. It just means maybe a pullbacks on the cards here, which again could be a nice opportunity to actually get into some positions, maybe some bigger swing trades as well. So I'm kind of seeing this kind of wedge pattern between a lot of them. NAS 100, same sort of situation. I mean, we're very close to the highest. I wouldn't be surprised if we just go and spike them even by the end of the week, to be honest. And looking at the Dow Jones as well, I think, yeah, that's looking a little bit fatigued as well. So I'm still very bullish on them. I think the major indices for the US, I think we're still likely to keep pushing higher. I think, though, because they are looking a little bit corrective, there might be a pullback, which could be a good thing. But yeah, I think they're likely to keep going.
Yeah, that's interesting points about the momentum slowing. I would definitely agree. I mean, you had the rip your face off rally from the lows, and we've kind of gradually come to a bit of a slowdown here. I would not be surprised either if you saw, maybe a week or two of downside movement, maybe as this, as the 90-day pauses and all this tariff stuff kind of comes to a head here, and it looks like, okay, we're now solidifying the tariff stuff, and there's a number of reasons what could go quote unquote wrong, but the market has really flipped from very, very pessimistic to now more neutral in terms of its sentiment. So yeah, very, very interested to see. I know, Marco, you're watching the indices. You mentioned that. Do you have any levels specifically, or which indices that you look at? And actually, I know I threw like 7 questions here at you at the same time, but do you choose a specific index more so than the others? Like, do you like the NASDAQ? Do you like the S&P, and maybe why that is?
Yeah, so I think my top pick would be the NASDAQ, just because I think it kind of has all of the best US stocks right now. So I think it can provide a lot of movement. And the level I'm currently looking at is this support right here, or maybe even a bit lower, but let's say the first level is right here. So if we touch this support and I get an opportunity to enter, I think that would be a pretty high probability play. Some others that I'm looking at, of course, S&P, US 30, the Russell, but my main focus is the NASDAQ, and I also like the DAX. Right now, we're actually approaching this very key support level. So once we do activate this alert or cross the level, I would consider buy setups here as well. So probably in the next week or in the next few weeks, I'll be in a DAX buy setup and in a NASDAQ buy setup if it does eventually produce that pullback, which it hasn't done yet. For now, it's just been like a straight train to the upside without a pause, which is a bit problematic because I don't really want to be buying straight here on the highs. I would like a bit of a pullback and then an opportunity for a better, let's say, risk to reward, so that I can put my stop loss at, I don't know, let's say this level, target the highs for the first take profit, and then let the rest run with a trailing stop loss. So that's why I'm looking for pullbacks, because if I do buy here, I need to have a pretty big stop loss if I want to let's say put it underneath this low, and I cannot really target the highs. It doesn't make sense as a trade with this risk reward. So I would need to wait for a much bigger move. So that's the game plan for indices for me.
Yeah, I'll tell you one of the just to add on to that context of waiting for a pullback here. One of my favorite things to look at is specifically the put to call ratio, because this to me is just, it's one of my favorite ways to look a little bit at the crowd sentiment. You know, if we see people kind of sell out quickly if they're positioning in something, and people panic and buy a bunch of puts on the market, the put to call ratio tends to spike higher. And so that has actually been, and the opposite is true when people go rush to buy calls. There's this, what I like about it is it almost helps me to spot like flushing out moments where people are like, oh my gosh, it's going bearish, and they freak out. And that's to me like a great time, especially when you have a big overall upward trend. I love this signal. It's almost like an RSI, but it's like flipped. Like when it's reaching the high end of this, you know, you're getting some oversold status, but that's just telling you, of course, that the demand for puts is very high. So it's a really simple sentiment indicator that I really like to keep an eye on. But we've also built it for like a whole bunch of different things. Like you can look at like gold, for example, or you can look at the NASDAQ, or you can look at all sorts of things. So you can see NASDAQ. What's interesting about this recent rally is that despite the aggressive move higher, we still see sentiment pretty negative in this market. Actually, we did get, oh, look at this. We just got fresh data here today, and 33, oh, this is the first time sentiment has actually flipped. Majority of respondents saying bullish compared to bearish. So we've had just like months on end of people just pessimistic about the market. Seems we're now officially back to a neutral state. So just something to add. So yeah.
And I like the methodology of playing also the catch-up trade, possibly like on the US 30 and on the Russell, because those ones haven't reached the all-time highs yet, aren't even close, to be honest, if you compare it to the NASDAQ. So that can be a good play. I do think you're in a Russell buy trade.
Yep.
So I'm going to have to take a look at that. US 30 and the Russell may be actually good because they have plenty of room to go up.
Yeah, both kind of well off their highs here. So we'll have to keep an eye. Last thing I wanted to ask you guys about is the Japanese yen. So Miko, what are your thoughts on the yen? Because yen has been, I feel like yen this year has been very confusing. It's been back and forth, you know, just taking a look at the dollar yen the last few months. Obviously, you had the big move lower on dollar yen in April. Many currency pairs lost a lot of ground to the Japanese yen, but it's just been a chop fest for a lot of currency pairs. Do you have any positioning in the yen, or are you looking for setups? What are your thoughts right now?
Yeah, yen's been a little bit all over the shop. I mean, it's performed better with some other, like dollar yen's been not that bad, but like pound yen has been very choppy. Euro yen's been all over the shop as well. So yeah, it hasn't been particularly great. I mean, it's starting to break out now, but for the most part, it hasn't been very straightforward. I do like I do like Swiss yen. It's coming into some resistance now. I'm still looking to see if I can short the Swiss as well. We're not quite there yet, so I want to see a little bit more upside into 177. But this is a big turning point in the market, and depending how we react there, I think there could be a very big swing back down again. Of course, it's gonna rely on what the yen's going to do as well, but I've had a look at the yen basket a few times this week, and again, a little bit of a mixed bag for this one as well. Very sideways. There is some nice support below us where we might bounce from as well, but to be honest, I'm not so keen to trade the yen pairs because I don't have that kind of quality kind of setup which I'm confident with. So I'm kind of just waiting for more information. Hopefully they could develop over the next couple of weeks or so, and then I can find a better opportunity. But I think Swiss yen, I like. Others, I'll stay away from for now.
Fair enough. Yeah, no, it's been, I've had a hard time kind of getting the direction right on the Japanese yen. It's just been very choppy back and forth. I've traded like New Zealand yen recently here pretty decently. I still have my long position. I think this is going on like, I don't even know how many weeks now. It's probably been 5 or 6 weeks that I've been in this New Zealand NZD-JPY long position. I still think it has room to continue higher. The New Zealand dollar has looked pretty strong to me recently. I know Marco, you were watching this currency pair. Are you still trading it at all?
Yeah, I'm in a buy setup. Just took 50% of the position off.
Oh,
So
nice.
when we touched this high, I took 50% off, and now I'm letting the rest run. Possibly going to take the full position off at the same level that you're looking at, but I may just trail the position if it does decide to continue to trend higher. I think this is a great play. You're getting positive swaps, so you're not losing money if you keep holding this trade. So I'm just happy to hold it. Am I looking for more JPY sells? No. So this is the only one for now. Rest of the JPY pairs are not looking that interesting to me. I'm focused on the dollar, I'm focused on the indices, and just letting this one run in the background. Currently very happy with the 3-1 that I banked on the first position, and now we'll see for the second one.
Yeah, pretty solid. That was a nice move there. I definitely I was looking at it from a perspective of willingness to add to the trade, so I don't have a very big size position at all, but it is floating in the green, so we'll see if we can get some more upside on Kiwi yen for both of us. So we'll keep an eye on it. Guys, I want to thank you both for joining us here on the stream. But before we let you go, let me just remind everybody, if you enjoyed the commentary from Miko and Marco, they have their own YouTube channels, and I would highly recommend that you take a second to go seek them out on YouTube. You can search their names, Miko Audu or Marco, or always Marco's Trading Journey. You can always just search them up directly. We'll also leave the links in the description or in the chat here in just a second for you to click that directly. Guys, thank you very much for coming on the stream as always and sharing some ideas on the markets with us. And we'll see you back on the next one.
Thank you. See you next week. Bye-bye.
See you guys. All right. Always good to have those guys on. Like I said, we do that every week, just going over market setups and ideas. Definitely go seek them out on YouTube and take advantage of the free content they're doing. Euro pound is a trade that I'm currently in. I went short a second position on Euro GBP. I want to talk a little bit about why I did this. So if you are newer to my content, then, well, if you're newer to my trading style. So when it comes to currencies, I'm more of a dollar cost averaging junkie. I love to trade longer term on FX. And then when it comes to, indices and commodities, I'm much more of a momentum trader, trailing stop methodology, etc. But part of the reason that I added to my Euro short position is because on our economic heat map, the Euro kind of getting a neutral mixed reading, and the British pound continues to look strong, relatively speaking. I also think that on a technical basis, this is a currency pair that tends to move sideways over the longer term. And so as we push higher here, I've decided to take a second short position up in this area here. I'm still in the red between the two trades, but I took an initial trade here, an initial trade here. I have willingness to add to the trade up at the 86 and 87 levels as well. And these are very small positions. So when I say dollar cost averaging, right? Sometimes that people freak out about that. They're like, oh, is this like a martingale doubling down and just hoping for a reversal strategy? And I've done a full strategy on this. That video did really well on YouTube. People seem to like my breakdown on the strategy. But you can seek that out if you want to search it up on YouTube. Just search up Trader Nick dollar cost averaging Forex strategy, and it'll probably show up. But I am looking for a bigger move on the bigger picture here down to, for example, this 83.50 area of support. I think that price is likely heading lower on a bigger picture. I don't know that for certain. And if I'm wrong, then I'll manage the trade. But I do have a second position that I just picked up here today. I shared that inside of the Discord. And if you resonate with that style of trading, or you resonate with the style of trading that I do on indices, for example, my trailing stop that I've got running on the Russell, then I would encourage you to come join us. I mentioned this earlier, but we are currently doing our biggest sale discount of the year on memberships. You can get 45% off if you're watching with us here live. I'm going to just drop a link here in the chat. If you click this link right here and send my support team a message letting them know that you're watching the stream right now and you'd like to get 45% off, you get 45% off the VIP membership and or the Edge Finder, if that's something that you're interested in. Just shoot us a message and let us know there. dollar cost averaging on a challenge sounds like a horrible idea. So I'm not a prop firm trader. I trade my own capital, and I just trade tiny position sizing. So I'm probably not going to be passing 50 different challenges with this approach, but I am very likely to make slow and steady, consistent gains over time. And that's all I'm after. So, to each their own. Some traders love dollar cost averaging, some do not. And that's okay, right? There's different styles for different people. Some people like trading the 1 minute chart. I like trading the 4 hour and the daily, right? There's just different styles for everybody. And that's the cool thing about markets. So if you resonate with the style of trading that I do, if you want to be more of a fundamentalist, if you want to be, combine sentiment, fundamentals, and technicals, and you jive with that, and that sounds like your type of crew, come join us in the VIP group. We'd love to have you there. Going to wrap up the stream here for now. Thank you very much for tuning in to today's A1 Trading live stream. I hope you got plenty of value out of it, and we'll see you on the next one. See you guys.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.